All right, so as I said before, I'm going to consolidate most of the Outlook and reviews into Discord, and then if I want to go into the dynamic examples and review or Outlook, then I'll go to the trading view. But for starters, we're getting into a new week. This is going to be the Outlook for the week of July 22nd through the 27th, 2024. And we're going to go over my view on price action on NQ and what's going to happen this week. A lot has happened in the socioeconomic portion of the world, whereas in the United States, as of this time, our president actually, President Joe Biden, just dropped out of the next presidential race, which I was talking about in a chat in the RCV Visionaries Endura chat with a couple of traders that that will affect the market in a major way. And what I mean by that is just going to catalyze a lot of volume and momentum into the moves that happened this week, right? So we may see, instead of price action taking, a week to happen, it might happen in a day or two. And for example, I actually was trading today, Monday, and we're going to go over one of the trade that I did take and that I broke even on, and why it occurred, right? And then we're going to get into the outlook for the week. All right, so come over here to the charts tab, and it's going to go here. So first and foremost, continuing off of last week, we saw pretty bearish price action that cleared the overall or the immediate range, bullish range that we had marked up. And ultimately, when I went in to do my analysis to try and catch a trade this morning, what I saw was this liquidity grab that occurred that's marked with this black line in LG, and it mitigated a 50% of a point of interest of mine, which actually resolved not on the 4 hour time frame, which is shown here, but it ended up being on the 1 hour, and it was a 1 hour wick. And I couldn't go back far enough in the data to find exactly what it mitigated, but the logic still applies. All right. And so that's what sparked this move upward here. And so I'm just based off of the logic that I have from RCV concepts, we see that we've broke major bullish structure, and I'm anticipating a bearish range. And so I'm just looking to capitalize off of the pullback, so buying into the potential premium of this bearish range. But I'm also taking into account that this is a liquidity grab. So if structure forms as it has so far to push price higher, then I'm going to play that structure first and foremost according to the principles that I abide by. All right, so ultimately what I ended up finding here was a 4 hour inefficiency based off of this play here, this liquidity grab, POI mitigation, and ultimately found this 4 hour inefficiency, which I think was around 9:30, 10 o'clock, I think. And obviously I don't enter off of this because that would be a pretty large stop loss. So I mark it up and I refine. And so that's the steps that I go through pretty much, is I find a higher time frame POI and I refine down to see where exactly or where I think price is looking to go. So once I refine, my first step is going down to the 30-minute time frame, and it's a little bit arbitrary for how I choose my time frames, but I always start with the 4 hour first and foremost, and then I navigate through those. So like if I look at the 1 hour and nothing makes sense, I immediately just drop down to the next time frame. So I just scale time frames, and I'll show you the time frames that I look at. You can also see it in previous videos if you just look at the time frames that I have marked up on TradingView. But nonetheless, stop rambling. Went down to the 30-minute, and I found inside of this 4 hour inefficiency a wick that mitigated, as you can see, that little bit of wick on that black candle there, which brought my eyes to this wick, and then that's what sparked the move higher. So essentially what I ended up doing was I marked up that, but I was like, let me see if I can refine this even more. So I refine, right? And I went down ultimately to the, let's see, it was the 1 minute time frame, yeah. And I found inside of that 4 hour inefficiency refined to that 30-minute POI, and I found this 1 minute sponsored candle that had a move that mitigated liquidity to the left here, which I'll show here in a second, and sparked this push higher. And so ultimately, that's the candle that I wanted to trade on. And the result, I entered at the open of the candle, stop loss just below the low. It mitigated most of the candle, which probably means that there was something on like the seconds time frame, 5 second, 1 second, whatever. I wasn't necessarily looking to go that deep into it. I think I was cool enough with the 1 minute. And price reacted great, right? I was up $1,000, $2,000 on the position, and then I moved my stop loss to break even. I disregarded my rules of where I should move my stop loss to break even. And so price tagged me out. I went to go to lunch, and then I see price action running. And I was like, God dang, missed out on a 13 plus K trade. But hey, not going to make that mistake again. Learned my lesson for the final freaking time. And I'm also going to add in here, just as a note, a journal entry really, is that I'm going to stop moving my stop loss. I'm taking a note out of Brian's book from the RCV group, and just something that we talk about is like being comfortable with the risk. And so if my stop loss get hit, my stop loss get hit, right? And I'll TP, like if I feel uncomfortable in the trade after price action moves away from my position, and if I'm comfortable with the profit for the day, I'm just going to take profit. But I'm going to set my entry, stop loss, and take profit. And if I feel, based off of how structure or price action is occurring as it's moving towards my take profit, then I'll cut the trade, or I'll just let it run and take profit. But I don't want to move my stop loss anymore because I've been burned way too many times. Burned way too many times moving my stop loss to break even too early, or just moving it to break even, then price comes down after like racing up for a pretty long time and then dropping back and then going up again. So yeah, I'm just going to stop moving my stop loss. I'm going to set it. It is what it is. Let it run a TP or take profit whenever inside of the entry stop loss TP range. All right. So yeah. So now let's go over here to the dynamic view, which is trading view. Right. And ultimately, like I said, what I ended up trading here was off of this 1 minute candle here, right? And I chose this candle was because based off of the mitigation here, it was a very, very like clean liquidity grab. And notice then right after that, price ran. So yeah, then price ultimately ended up mitigating the 1 minute candle. And then actually what ended up happening here, if I zoom out, it hasn't reached that 4-hour target yet, but it reached the intermediate high, which was created on the day, the daily high basically here. And that was the target for the daily. But I'm expecting, which we'll now get into as the outlook, is potentially I'm expecting pullback into this range, or potentially just consolidation, drop, and then run. And ultimately, what I'm looking for from a 4-hour standpoint now, so let's actually look at this way, is, okay, like we said before, we had bearish price action run clear out the bullish range that was created here. We had a liquidity grab and a 50% POI mitigation. And now what I'm expecting is that we have a solidified high here, and we also have a solidified high, or solidified low, solidified high here as well. And so now what I'm looking for, if this is going to continue the bearish price action, and if we are going to enter into a bearish market, what I'm expecting is for this low to be substantiated after the mitigation of this high here, which will then create this bearish range from this high down to this low here. And then now we have a range to play in where I will then begin to look for my points of interest inside of the premium here. And then obviously, if we are beginning a bearish trend, I'm looking for, let me actually do it this way. I'm looking for something like this. I'm looking for price to come up, and this is very overview, not getting into the detail, but I'm looking for mitigation in the premium, rollover, and take out target, right? And so now that's what I'm expecting as far as the outlook goes. And ultimately what I'm doing here is going into Tuesday is I'm expecting price to push up to clear that high, and I'm going to catch trades as we move into the premium, only looking for buys, anticipating that we are in the discount of this potential range. But if I wanted to be conservative, even though I'm not, I would wait for this high to be broken here, and that now I know that this range is solidified, and then I'll start looking for plays discount, because we'll be in the discount really, looking for plays to play into the premium, and then I'll start looking for points of interest here in the premium to look for sells ultimately. Right, so that's really what I want to see during this week. I'm actually going to save this this chart here, and we'll see what happens, right? But obviously, this isn't like set in stone. This is just the preliminary analysis or prediction, or the outlook really. And if something else happens, then I'll note it and I'll talk about it in the review, right? And see, okay, what did I miss? What happened, right? But always I'm adapting to the market conditions, but I'm still sticking within the framework of that structure is law and the other RCV principles and concepts that I've learned. All right. Yep. So that's it for the review, or I'm sorry, the outlook of July 22nd through 27th, 2024. Hope you learned something, and let's have a great week trading. See you guys.